Good morning, traders. It is Tuesday, the 30th of June, 2015. It's 8:01 a.m. Chicago time. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Pretty light news overnight, still driven by Greece. Greece poised to miss its IMF loan payment today. Greece's Cyprus is said to consider last-minute initiative for an agreement. Just about a couple hours ago, Greece's deputy foreign minister says we'll reconsider the vote, the referendum, which is this Sunday, if they can get a deal they cannot refuse, which I don't know, that made me chuckle. They're the ones in a bad position, but they need a deal that they cannot refuse. But China's Shanghai Composite ends positive after registering a 10% intraday swing. 10% on a composite index, largest movement since 1997. Not much else on the news feed. Just a lot of chatter. Looking ahead at today, we just got ISM Milwaukee. We got S&P K Schiller, and the housing numbers. But coming out 15 minutes after the open at 8:45 Central, we have U.S. Chicago PMI. The consensus is for 50.6. At 9 o'clock, just 15 minutes after PMI, we have consumer confidence at 97.1 expected. As far as speakers today, we're looking for the EU speaker Juncker at International Press Association in Brussels at 11 o'clock Central, 12 Eastern. And we're looking for Fed Speaker Bullard, a non-voting hawk on the economy in St. Louis at 5 p.m. Central, 6 p.m. Eastern. As far as auction events, 10:30 today, 10:30 Central, we have 4-week bills for $30 billion. That's what's on deck as far as the calendar is concerned. Let's switch gears here and look at what our other picture looks like, our technical picture. So yesterday, the primary hypothesis per yesterday's Trader Bite was for it to start off choppy, and the expectation was for it to rotate up to test 86.25. As a primary hypothesis, the expectation is that we would start to work our way back to the scene of the crime, which is 95.75, 20.95.75 above. So as I drew yesterday, we were looking for a fairly choppy open, and then we're looking for a break test into into that 86.25 pullback and potentially push, with this being the key target as a primary hypothesis. Reason being, yes, we are aware of what the Greek situation is, but we're also aware that this for them to miss the IMF payment is not the end of the world, and the market's kind of responding to that a little bit. The secondary hypothesis is failure, open auction in range, and I drew it out, and I expected it to kind of get wide and then potentially push down into the 2055, which is a composite low volume node here. It was right here, 2055. That was the next big area down, and then the big area beneath that was the MC point of control, the MC LVN down here. So I'll show you that too. So that's right there at 2047. This notch out here, it's yellow on yellow, so it doesn't look so great, but you could see that spot right there. That was the next area, and that's actually where we ended up pushing through. The microcomposite here starts on February 13th. We're still in that balance, and it includes Friday's action. 2047. 50, and then the big area to test still, which has not been tested from above, is 2011.50 in the September contract, which was 2019 even in the June contract. we broke out of this balance here to the upside, but never actually retested the most valuable price, which is 2019 2011.50, and it looks like we're heading that way. The problem is this is not occurring on its own power. This is occurring on news, and so that brings in the scene of the crime, or the recoil or flashback to where the auction last was before the news was released. So I can't tell with any type of decent probability that we're likely to walk ourselves down to it. But I still expect a test of this level at some point. There's got the market has accepted this level as a valuable price back October through February, and has not retested, has not re-auctioned that price, and that's fairly unusual. So that's the key target below 2011.50 in the September contract. But yesterday, Hypo 2 played out, Hypo 1 did not. Hypo 1 made a pretty valiant attempt here to 83 and a quarter. It stopped 3 points short of its first target. And then again, its next target would have been 95.75 for a return to the scene of the crime, and it instead rolled over. Once it pulled back to the mid and made a nice attempt. So you can see here, it pushed up and over the opening swing high, and it pulled back to the mid, and a really nice push up above. Then it gave us what looked like a second chance with a pullback to the mid again right here. And then it failed to make a new high. And once it broke through the mid, then it retested from above. So you can see these two tests right here. Those are ideal entry points. And to me, because I'm not a fan of trend days. Yesterday was sort of an orderly trend, but I'm not a fan of trend days. The only clear and clean opportunity I saw was right here, and then the secondary was right there. There was not much else I could do with this, so just looked at other markets. But you could see that the market was fairly this pattern here going down with the delta sitting sideways. You can see the delta here just going sideways. It just didn't seem like price was moving down without aggressive sellers until we got down here. Once we got down here, then we saw the aggressive sellers come into the close, almost like those who were long the gap and were covering. There's a fair amount of selling into the close. We lost a delta of about 35,000 contracts, which is a fair amount. And so with that, we ended up finishing with the point of control down below. Point of control is this line here. The point of control is the most traded price in the area in the day, and you can see the value area is expanding. This shady area here is the value area expanding until the point of control moved down, which happened right here. At this point, the point of control moved down into this into the low end of the range. What that means is generally when the point of control moves down with a very weak low like we have, so we have a point of control with a weak low. Why is it weak? Let me redraw that. When we zoom into this, you can see that there's no taper. What we want to see is a profile that kind of does this and then tapers off. You want the volume to taper off to show that sellers were no longer motivated to provide liquidity to buyers, and so the market tapers off. But what happened here is we have the point of control shifting down, and then we have a blunt low, which makes this a weak low. Weak lows usually mean that we have a continuation trade overnight, which we didn't get. Overnight, the market actually recovered some of its losses. So here's what the overnight session looked like. Here's yesterday's trend down, and then the week low, and then the market just basically never tackled this low. To me, this low is going to be a target for today for any selling because of its weakness. Okay, a decent move here on the European, right after the European Open, and it's been holding on the upside. It looks like it wants to recover. The level to watch out for today is this 2072.75 LVN right outside of the value area, even though it's a trend day. That's the area I'm looking for a battle. The primary hypothesis for today is for CHOP. We had a very wide-ranging day yesterday. If you look at the profile of this is the profile of the range. These bars here show us the range, the daily range for the day session. And this profile that you see right here is plotting out what the first standard deviation from the most common range. The most common range right now is 9.25 points. This is a dynamic profile, and it's showing us the 21.25 points. 7.25 to 21.25 points are what we would consider to be normal. These are normal ranges. Anything outside hits the second standard deviation, which means that only there's a 5% chance on either side, 2.5% chance on either side that we would exceed this 21.25 statistically. And yesterday we went to the second standard deviation. Yesterday we had 36. The second standard deviation is 36.25. So this is a very, very wide-ranging day. With a wide-ranging day, generally the next day we get the market rests. It's kind of like sprinting up a mountain. You need to take a break for the next leg to happen. This whole thing is an impulsive move. This is an impulsive move, so I expect another leg down. And again, I'm aiming for that 2011.50 over the next few days, barring any good news out of Greece. So today, expect it to be stuck here. That's the primary hypothesis. Any move to the downside, I'm looking for this low to be taken out because it's weak. Okay, I'm going to leave you with that thought. I'm running out of time here. Hopefully you find this useful. Hopefully you're also controlling your risk and not being stubborn with the market. Do not expect a trend today. Anything is possible, of course. Trade your plan. But the probability of a trend day after a trend day like yesterday with the wide range is fairly low. But it's still there. It's still in the realm of 12 to 13% historically. But the bulk of the percentage of the probability is going to be on the side of just a choppy trade anticipating news. We do have PMI, we do have consumer confidence, but other than that, the market has to wait for news on Greece before it makes its next move. Good luck to you, and I'll catch you tomorrow. Take care.